How's it going, everybody? This is BeatTheBush. Today I'm going to talk about my investing failures. Now, whenever I talk about an investing idea, it's always been something that have had success already in it. However, in the past, like when I first started investing in high school and also in college, I didn't have such good success. I barely made it out breaking even. So today I'm going to talk about all those failures and what I learned from each one of them. So today I'm going to talk about 3 individual stocks that I invested in and why it was such a bad idea. Hopefully when you hear about all these stories, you'll sort of gain experience for yourself. One of the first things I bought in high school, and yeah, high school, I somehow got my hands on a brokerage account even in high school. So I'm not going to discuss how I was able to get this, but I started buying into a penny stock. Even at the time, I think I had about $2,000–3,000 as a high school student. I think I was in senior year. So what happened after was me reading the news every single day on this particular penny stock. Somehow I led myself to believe that I was actually investing when in fact I was not. What I was actually doing was reading the news and I was reacting to the news rather than doing long-term investing. I was basically buying, and selling maybe up to twice a day even. And I would do this during school, and somehow we have internet during class and I was like buying and selling right when class was happening. So sometimes a stock would go like from 17 cents and then it will bounce all the way up to 40 cents with no possibility for me to predict that it actually would have happened. It was just kind of like gambling. I was like, okay, one day it goes up, one day it goes down, there's no predictability in any of this. So in the end, what happened is, I had to invest for a really long time, and I still did not realize that I was actually gambling, because usually with any kind of penny stock, it's so opaque. You do not have all the information that all the investors does. There's always going to be a bunch of insiders that knows more information than you do. Of course, that's insider trading, but for small penny stock companies, this is a lot harder, meaning that it's a lot easier for them to cheat a little bit and no one would actually ever notice. So there's my failure. But the good redemption point of this was I started investing early, although being in a bad way because I was buying into penny stocks. The good redemption point about this was that I did not have all that much money. It was a lot to me at the time. It was basically, almost all my savings, and I just put everything in there, buy and sell, and then I accumulated a lot of frictional costs in terms of trading fees. Back then, there's not as many free trading platforms as right now. So the lesson here is, yeah, you can go off and start buying and selling and thinking that you're investing when really now I know that I wasn't. I was just gambling. I'm like, oh, okay, look, there's a stock. I did not know too much about it, but I thought I was learning more about it from reading all the news every single day, reading all the news I know about it. But it's still, these days I wouldn't even buy into a penny stock at all. The second point where I failed miserably was when I started college. I went to UCLA. At that time, I went into a brand new bank I've never been to. It's a national chain bank, really big, and I walk in there, and then as I'm getting my checking account, doing some various things, they have a flyer saying, oh, mutual funds, look at the past year, past second year, past 3 years, we've been doing like 17% gains every single year. So I'm like, oh, wow, that looks pretty good, I should invest. I talked to one of the advisors over there and they're like, yeah, buy. And so I'm like, okay, I'm gonna put a portion of my savings in there. And what ended up happening, it always happens like this for some reason. After I buy into it, then it dropped a bit. I forget how much it was. I think at that time I invested maybe $5,000 or something, and then it dropped to I forget how much realistically, but I remember the whole time I had it, it wasn't it was in the red the whole time. Basically, I waited probably 5–6 years before I actually sold it. That whole time it was creeping up a little bit at a time. It was coming back to breaking even at some point, and eventually when I sold it, it almost broke even. But even if you sell it at the same price that you bought it, you actually lost time, because all those years you could have been collecting your 8% annual return. So the very I wouldn't say cheap lesson, it was quite expensive a lesson, because if you say $5,000, 8%, that's $400 a year times, let's say 6 years, that's about $2,400 worth of lost revenue or lost profits that I did not have because I made a wrong investment choice. So what's the $3,000 lesson I've learned here is be super duper careful when someone is soliciting you an investment choice. When you walk into a bank or something and someone asks you to buy something, be very, very suspicious. They want a fee from you, because when I bought that mutual fund from that bank, someone made money, and that's how it is. I was stupid at the time. I did not know what I know today, and I hope this helps you guys. You know, every single thing I'm talking about here is like one very expensive lesson for me. The first one with the penny stock, I don't know, costs about like $500, $1,000 in terms of cost of that lesson. This is the cost of experience, and you can see as I'm talking about the first one, okay, it cost me $500 to $1,000. The second one cost me $3,000. Buying Sony stock was actually the third mistake I made. There are various lessons here because Sony is not actually traded on the New York Stock Exchange. There's various currency risks here because the asset is actually in Japanese yen. Now let me talk about what is wrong with buying the Sony stock. You could buy it correctly if you analyzed it correctly, because Sony is a really big company. They make a lot of different products. My mistake at the time was that, PS3 is really popular. I have great belief that it's going to be very, very popular. Therefore, let me buy Sony stock, which is the completely wrong reason to buy. Just because a company makes one single product and you like it does not mean you should buy that particular company, unless it's a very, very good product and most of the revenue comes from that particular product. For Sony, they're a huge company. They make TVs, they make like recorders, audio equipment, you know, it's like this huge conglomerate. They do not only make video games. It's like a very, very tiny part of their whole profits. So basically what I did was I bought a company based on one little sliver of profits that they're making from, you know, one tiny little bit of their whole business, and that is the completely wrong way to buy a stock. If you analyze a whole company, it might be profitable. You might go, okay, yeah, you know, this business, maybe 100 different businesses you put all together, and you have to look at each one to see if, you know, in aggregate that they're gonna be doing well over the next year, over the next few years. So that was a very, very important lesson for me. You have to analyze the whole company, not a single product. I know this is stupid, you know, it's a very, very stupid mistake. In retrospect, I realize it's a very stupid mistake now. But I hope this lesson will, you know, teach you something, because I did buy, I forget how much I bought, you know, at least $10,000, $20,000 worth of it. And what happened was, I think I did take a loss. It dropped quite a bit at one point, all the way down 40% or something. And I waited really, really long, and I came back, you know, to only like minus 10, 15%. And I'm like, okay, this is as high as it'll ever go. I'm gonna sell it, take a loss, and, you know, forget about it. So that's what I did. It took a slight loss in terms of the original value, but then there's also the time loss. It must have been like 4 to 6 years of me that was holding on to that stock. And well, that's the third mistake. So if you watch my previous investing videos, I've added these tips that I've talked about today in those videos before. This includes be very, very careful with buying penny stock. I would even recommend to not buy them at all. High cost mutual funds being more beneficial to the person that's selling them to you. You really have to look at conflict of interest whenever someone sells you anything, including investment advice. The third one, of course, is to know every revenue stream that the company makes and not just a little sliver of it. I hope this video helps you learn a lesson that I learned. This is experience here, which cost me a lot of money. If you're interested in supporting my channel, check out my Audible link down in the video description below, where you can get a free audiobook. And remember, if you want to check out new videos that I generally make it every single day. Topics around finance, net worth, credit cards, everything to do with money. And remember, if you want to get my new videos, push that subscribe button over here. Thanks for watching.